Hi folks, Lee Bricky here, and the real estate market is really facing some strong headwinds nationwide and here in Florida. And that is because we're seeing the economy begin to slow. We're also seeing interest rates going back up, and we also are seeing inventory continue to rise month after month. So what does all this mean for interest rates and the housing market going into 2025? Well, that's what Brent Starts and I are talking about today on this video. But if this is the first time you've been to my channel and you're interested in real estate anywhere between the Treasure Coast and Palm Beach County, you're going to want to subscribe. So go ahead and slap that subscribe button, ring that notification bell so you don't miss any of our real estate tips and tours. And with that said, let's bring on our good friend Brent. Hey Brent, thanks for joining me today. I really appreciate it. So before we get started into all of this, why don't you tell us what's going on with rates right now and programs? I know that a lot's changed and a lot's coming up towards the end of the year. So why don't you go over that real quick?
Yeah, it's been interesting. Last few months, actually, obviously the Fed started talking about, cutting rates, and what that is, it's a Fed funds rate. That's the rates that banks borrow from each other to reconcile their accounts, basically, long story short. And it impacts things like the prime interest rate, the banks that commercial lenders receive from banks, the best customers receive from commercial banks. And it impacts auto loans, it impacts HELOCs, equity lines of credit on people's home loans. But it doesn't impact the mortgage market, the first mortgage, purchase, refinance market, really. It actually, it tends to trend with it, of course, but not a direct connection. So what we saw actually when the half-point cut happened here several weeks back, actually rates started to go up because we had some positive income, information coming in as far as inflation and as far as jobs, reports and things like that. So it's going to be a choppy ride down. Rates are going to go down over the next 2 or 3 years for sure. That's definitely the consensus out there. And we've seen that trend kind of take hold again after 5-6 weeks of rates slowly creeping up with that more positive news about the market. So that's kind of what's going on now. Your question as far as programs right now, there are some great programs now because lenders lend. That's what they want to do. And so what we're seeing as far as the opportunity from the mortgage business right now, it's refinances. We have a 90% loan to value loan for conventional with no mortgage insurance to pay off those credit cards, to pay off student loans, home improvements, those types of things, cash out. So a lot of people struggling. What we're seeing in the front lines right now, a lot of people struggling to make ends meet. And we've seen that in the jobs reports as well. A lot of second jobs, those jobs that are being created that show, hey, things are more favorable out there right now. If you really dig into the numbers, we're seeing a lot of those are second jobs. And so people just trying to make ends meet. That's reality on Main Street right now.
Right. So anything as far as purchase programs out there right now, and what are folks looking at right now for a rate on FHA and conventional?
Yeah, FHAs, we're in the low to mid sixes right now, depending on the credit score and other factors. But you're right below 7 right now on conventional. As it creeped up a little bit, we were down low to mid sixes on conventional, and it's creeped up a little bit. Depends on again credit score. It depends on loan to value, that type of thing. But figure low sixes into high on the FHA, high sixes right now for conventional right now.
Right, and VA'd be right around the FHA, right?
Exactly. Right.
All
Right
right.
in that neighborhood.
All right.
Yeah.
Anything else?
Yeah. Right now, I just think that people, I think it's really important to remember in times like these, Lee, why you buy real estate, because, the people we're helping right now, we're actually paying off credit cards, student loans, that type of thing. It's about payment relief. And so right now we're saving people, hundreds of dollars, if not over 1,000. I think we had one the other day. It was $1,700 per month that they're saving in payments. So it's about payment relief, and their rate is actually going up a tick from their first mortgage rate that they're refinancing. But getting all the other debt paid off, getting actually they had some damage to their home with some of the tornadoes and hurricane damage. So that's all being taken care of at the same time. So one of the things I think it's really important for everyone to understand is, why do you buy a home in the first place? The big picture is you're building equity, and at some point in time you may need that. It's a great safety valve in the event of a situation where what we've seen over the last several years, where inflation's kind of taken hold and things are more expensive, and it's a great way to press the restart.
I talked about it in the intro. Rising mortgage rates have really made home affordability unaffordable for most people right now. So that's why we're seeing the market slow. We have inventory issues, as I brought up. The inventory has grown dramatically, and the economy is slowing down. I mean, we're seeing the job market slow right now. And so I think that's affecting people too. Then we're running into the holidays, this is a slow time for the real estate market. But I think there's some light at the end of the tunnel for some people here if they're in a position right now where they can purchase a house. And I want to talk to you about that a little bit here too. But because we've been big proponents over the last 3 years, we've seen all of these. There's a couple other agents out there that have YouTube channels that have been on the same page as we have, that we're not going to see a crash in the real estate market. That's been over the last 3 years. We've been big proponents of, hey, we're not going to see a crash. But what we are seeing now is some price decreasing over South Florida right now, especially in our market, which is Palm Beach County and the Treasure Coast. Home prices have substantially dropped in some communities, $50,000 to $100,000. So if you bought a home 3 years ago, you're underwater right now. And I think that's all going to flush out down the road because inventory isn't grown over what it was pre-COVID, but it's substantially more. And we're seeing in Palm Beach County and the Treasure Coast, right around 80% of all the sales are below asking. So that's something that we want to talk about, is because these price drops and this inventory issue is created a buyer's market. If you see a home on the market right now for sale, especially right now in the holidays, because I know we've pulled a bunch off the market, and clients and other people that have reached out to us, sellers have reached out to us about what to do with their home. And we've told them, look, if you want to get what you want for your home, you need to pull it off the market, because over the holidays, you're definitely not getting it until this market picks back up. You're going to take less for your home. So all the homes that you're seeing on the market right now, these are people that have to sell right now. Mm-hmm. They have to sell. So for buyers out there looking for that right home, the homes are less. That's what I'm looking for.
What we're seeing right now on the front lines, Lee, I'm seeing seller concessions come back like they were, 5 years ago, is what I'm seeing. Absolutely. And so, people that are struggling to get the down payment together, now is kind of an opportunity because those sellers are willing to pay that cost, which has really helped us out.
Rental prices also we're seeing have come down dramatically. So working with investors right now and trying to work with them on their homes, they're having to lower their rental prices to get these homes rented. And we're seeing homes like Port St. Lucie is a great rental market. I mean, it has been always, and I think it always will be. And there it's taken about 60 days for a home to get come off the market to be even rented. So on new construction, a lot of these homes that people are buying right now that are inventory homes with these builders, they're under the market in the community.
Right.
So so the builders actually hurt the market in their own communities because they're trying to get rid of these homes and get them off the market. So they're throwing on these big incentives. So it really creates a position for someone where with a regular seller, you can get a seller credit, like you're saying, where you can get your closing costs paid. And then with these builders, same thing. You can get pretty much all your closing costs paid. And if you're a VA buyer right now, you can buy a home for pretty much zero down. I mean, if you get out there and you're not too picky, I mean, you're not going to go find exactly what you want. Most people, I mean, some people may, but most people are going to have to settle a little bit here and there to get these deals. But if you're a first time buyer, I think it's a great time. And if you're willing to do a little bit of work, and making the house the way you want it, it's a great time to buy. What do you think?
Absolutely. I believe it as well. And there's some creative programs too. The 203K is kind of coming back because, to do repairs. And like you say, you can pick up homes that have to be sold. We're seeing some people that are really struggling. They need to sell their home. And so,
Right.
with inflation and everything. And so, hey, some deferred maintenance, that type of thing. And let's face it, when you purchase a home, you really want to make it your own anyway. You're going to probably repaint the inside and do something with the floors and possibly a kitchen or, bathroom or two. And so I think those types of loans where you can purchase a home at the same time, get the funds available to take care of a rehab or making it your own. Those types of loans make a lot of sense right now. We're seeing that start to come back into vogue as well.
Right. Explain that 203K loan. That loan just changed.
Right.
So talk a little bit about that loan.
It's a great program. And FHA, there's a 203K program. And what it is, it's you can purchase the home, or it's a refinance actually, where you wanted to rehab the home. And actually, there's a limited FHA 203K. And what the limit is gone to, your change you're talking about, Lee, was $35,000 maximum in repairs. And so that's been bumped up to $75,000. So a pretty substantial rehab. It's not like a little,
Right.
paint and floor,
You can
smaller.
pretty much rehab a house top to bottom for that.
You really could. You really could now. And the advantage of that is you don't have to have a HUD consultant. So anything above $35,000 required a HUD consultant that you had to pay to help you with the bids and the contractor and, to kind of walk you through the process. So it's a little more flexible now. And what's called a full 203K is, it's really up to the FHA maximum. So, that's for the really, and that can be used. You can actually scrape a home and start from the foundation with that loan. So it's pretty, that's really a rebuild essentially.
Let's talk a little bit about the new administration coming in and what that can mean for the real estate market, because I know that's something that we're interested in, everyone else is interested in, because, one of the big questions is how do you cut taxes and lower interest rates at the same time? When Trump lowers taxes, when he comes in, he's going to lower taxes again. And that's going to put more money into consumers' pockets.
Right.
So the argument is that that's going to raise the inflation.
Mm-hmm.
What's your thoughts on that?
That's what Reagan did. I mean, he basically cut taxes and at the same time increased revenue. And so, when it puts more money into the economy and certainly more productive activity, right? And that's really
Right.
what we need to do. And so I tell people, during COVID, for example, when productivity went down to basically zero, we're still spending money, but it's money we don't have. We're borrowing. And so I think what we're going to see is a situation where it's not just the tax cuts, but it's also going to be the spending cuts. That's what, you just think of the country as a household. If everyone's sitting at home watching, Netflix or, Home Shopping Network, you're not producing anything, you're just spending and you're not producing anything. Well, that's a recipe for disaster, and that's for a country as well as a home. And so I think, when that debt went up to the point where we need to sell all this debt to keep it going, it's basically, imagine this, it's like, you're selling the debt just to pay the interest on your credit card. If you were liking it to a household, when you compare the household finances to your, what a national debt is, and, it doesn't make sense to have that type of debt on the books, and you cannot sustain it. You kind of have to pay that debt down because you have to eventually borrow more money to pay the interest. And that's exactly what's going on in the country.
Right.
And so, and when we do that, when it comes to mortgages, we compete in that same market, Lee. So we go out in the same marketplace and we're selling the debt, the household, the mortgage debt. And so when the institutional investors are picking up these mortgages, they're looking, hey, does it make more sense to purchase U.S. Treasury? And it's a safer bet, but I'm getting more from a mortgage on a mortgage return. The rate of
Right.
return.
So what you're saying is the more that we pay down this national debt, the more that we can bring mortgages down.
Exactly. That's exactly right. So it brings that competition for debt down. So that's what we're going to see, and that's what I'm excited about, because big picture, that will bring mortgage rates down. That will take 2 or 3 years. It won't be a straight shot down, overnight. It's going to be something that takes, months.
So also, Trump's been talking a lot about reducing regulations around mortgages and building costs, opening up more federal land. It's being floated out there, which I would just be ecstatic to see this happen, is
Right.
Bill Pulte become the head of HUD. And he is a super smart guy. And if you just see the way that Pulte Homes runs as an organization and how tight they are, with 3 different builders underneath them, Pulte Homes, Devasta, and Syntex, they're a great builder. I mean,
Right.
a great builder. I'm having an issue with a builder right now who just can't seem to get almost $1 million home in Port St. Lucie at that fixed. And it's I walk into Pulte Homes, and 99.9% of the time the house is perfect on the walkthrough.
Mm-hmm.
So they use outside people to come in to look at them. So they're a very well run company. Let's just leave it there, as a boots on the ground, looking at the builder from the outside and seeing how they build. So Bill Pulte has been talking about this for years on the business news about, they have to reduce regulations on builders. They have to make it easier to build a home. And I really think that, Trump, being a businessman, brings in a guy like this that, this is what he does this is what he did for a living. His father started the company, he took it over, and he can really get in here and help build homes on, get this government land release, reduce these regulations, and then start going into the states, speaking with the governors, talking with municipalities, and really getting busy over the next 4 years on getting land opened up that can be built on, and getting rid of some of this regulation. So you're going to have success in some places, you're going to have success in others, but he would be a great pick. But whoever takes over HUD, that needs to be their main job.
Mm-hmm.
Is how do we build affordable housing, right? Because rates are going to stay high for a while. So how do we build affordable housing so we can get more housing for these younger people, these millennials and Gen Zers that are out there working hard, trying to make a living, trying to buy a home, that have basically given up over the last 4 years.
Mm-hmm.
And then also, at the same time, paying down this national debt and bringing mortgage rates down, and if this happens, then we'll start seeing some breathing room for people to be able to go out and purchase homes.
Absolutely. Every month that goes by with rates in the 7s pushing 8%, that demand hasn't gone down. It's the affordability issue is remained in place. And so as rates do go down, that pent up demand will be released onto the market, and you're going to see prices go back up again. It's just math. It's going to happen. And so the opportunity now, I believe, is to purchase when, there's some options as far as seller concessions, builder incentives, that type of thing. And then the opportunity to refinance in the next 2 to 3 years. It's all but in the cards. I mean, it's just a matter of time, I think, before that happens with everything that's in place and where we are right now and the way things are going.
If you have any questions for Brent and I, our information's right there on the screen. You can reach out to Brent anytime you want. Hey, Brent, I really appreciate you getting on with me today and talking about this. We haven't done an update for a while. Let's do another one in a couple of weeks and see how things are moving along here. But it's probably going to be, pretty normal, same as usual. Nothing's really going to change. Rates will bump up and down as we roll through the holiday season, and then we'll see what happens next year, huh?
It's going to be great. I'm looking forward to it.
All right, my friend. Talk to you soon. Thank you. So I hope you liked this video. If you did, go ahead and like this video. I really appreciate it. Give me a thumbs up. It lets me know I'm making the right kind of content for you folks that helps you learn more about the market and where to buy here in beautiful South Florida. Also, if you have any comments or questions, leave those in the comment section below. We'd love to hear your comments, and we'd also like to hear what your thoughts are with the real estate market moving into 2025. What are you thinking is going to happen with this economy under this new administration, and also with the real estate market and interest rates? And then if you have not subscribed to my channel, go ahead and slap that subscribe button right there. Ring that notification bell so you don't miss any of our real estate tips and tours. And you can watch the next video on the market right there. Be kind to each other, and I'll see you in the next video.